You heard this next guest on episode 88, Brian Carter, who's a nonprofit practice leader and partner at Mauldin and Jenkins. And today's topic is fraud and abuse in the nonprofit sector. You're not going to want to miss this one. Please, I hope you enjoy this conversation with Brian. All right, as you heard in the introduction, this is Brian Carter I'm interviewing, and this is the second time Brian's been on the podcast, and we got a good one today. We're going to talk about fraud, abuse, and unfortunately it happens in the nonprofit sector. Brian, though, before we jump into the topic of the day, remind the audience, to tell us a little bit about yourself and your practice work over at Mauldin and Jenkins.
Yeah, sure. So Brian Carter, I've been a CPA now for a little over 29 years, been with the firm Mauldin and Jenkins my entire career. And I specialize in working with nonprofit organizations across the Southeast, but obviously primarily here in Florida, where I'm based. And then for the firm, I do lead our entire firm's nonprofit practice, firm-wide, which consists of over 800 nonprofit organizations throughout the Southeast, a lot of them in our Atlanta market, and then obviously here in our Florida market. But I am the firm-wide leader of our practice.
Well, Brian, I appreciate that and appreciate you coming on. So the topic is fraud and abuse, and I'm going to read to the audience. This is what drove it and why I reached back out to Brian. A report that came out just a month ago reported that the former COO of Jackson Health Foundation, that's down in Miami, foundation embezzled at least $4.3 million by directing funds to herself, her relatives, and to unrelated entities. And you sit here and you read that, Brian, and it's just horrible because that's money that's intended to further the public good and benefit. In this case, it would be patients, but somebody was able to, over a period of years, to abscond, if I think that's a word, with $4.3 million. So when you hear that, talk a little bit about it, Brian, how something like that happens, and how can a board and an organization mitigate that?
Yeah, generally speaking, the way frauds happen is really one of two ways. It's either a lack of controls, number one. Number two, collusion between multiple individuals to circumvent controls. And I guess, or three, I guess there could be controls in place set up properly, and the back end review people just don't do their job. I mean, that in this particular case, with the Jackson Health Foundation fraud, it was really, I'll use the term lack of controls, because they gave too much power and control to the individual that perpetrated the fraud.
Okay, and so talk a little bit about controls. What are they to the lay person, and what types of controls should be put in place?
Sure. So in this particular case, as it relates to the Jackson Health Foundation, the COO, who obviously is not the highest ranking employee of the foundation, the CEO is, the COO had complete and total autonomy over disbursements of the foundation funds up to $100,000. So the COO could approve, initiate, and sign checks for anything less than $100,000. And that, is an extremely large threshold. I mean, if you were talking about, the national, Red Cross or something, that's, maybe that's an appropriate threshold. But for a local Miami-based foundation, that is an extremely large disbursement threshold, for someone. So basically the CEO or no one from the board even looked at anything unless it was over $100,000. This individual single-handedly approved, wrote, and signed the check, or directed the checks to be written, and then she signed them. So that's specifically how this one happened. That's how it happened. And she knew the policy, obviously. And, ironically, $4.5 million disappears over a number of years in a bunch of checks under $100,000. And so the controls that the organization should have had, number one, that threshold should have been a lot lower. Maybe no more than 10 or 25,000, maybe. I mean, not to say that she still wouldn't have done something, but the impact could have been a lot less if it had been a $10,000 threshold as opposed to a $100,000 threshold. So that's number one. They could have lowered that threshold. Number two, the same individual that approves disbursements should not be the same person that signs the check. or initiates a wire or approves an ACH or something to that effect. Okay. So that was the second problem they had, is the same person that was approving the invoices for disbursement was initiating the wires or signing the checks, however they distributed their funds. So that's something easy that any organization can do. If you got take a small organization that may only have one or two paid employees, say a CEO, executive director, and maybe a program person, and the CEO is signing checks. You could take the check signing ability out of their ability and give it to a board member, right? And have a board member
Ah,
sign
yes.
the check, right? Or you can have dual signatures where the CEO signs and the board member also signs, right? Um, but if you don't want to do that, say you've got an appropriate structure, right? You've got in this case, the Jackson Health Foundation has plenty of employees. You could lower the threshold. The COO could not have had the ability to sign checks. The CEO would have had to have signed checks. And then monthly, the board should have just gotten a report of, a financial statement or some sort of report of what all the disbursements were. And they could see for themselves, we paid Brian Carter $90,000 this month. What does Brian Carter do for us? We paid Michael Corley $75,000 this month. What does Michael Corley do for us? That board treasurer position, they should be looking at stuff like that in some shape, form, or fashion on a monthly basis.
So
Yeah.
talk a little bit about controls when you have electronic signatures. Does that
Yeah.
change anything?
A little bit, yeah. I mean, again, the board should still be involved to a certain extent. You know, what people have to remember in the nonprofit world, the governance of the nonprofit extends to the board. The board is not there just to shake hands and kiss babies and raise money. Sure, I mean, that's one of their jobs is to shake hands, kiss babies, and raise money for the organization, but they're part of the governance structure as well. And, Florida does not have these rules, but there are some states, I think New York is one of the states, that in fraud cases like this, board members can be held personally liable for negligence. And so that just kind of illustrates the point of, board members are part of the management structure. They're part of the control structure. They're part of governance of the organization. They have a responsibility. Um, so electronic signatures are, again, it's the way things are going in our digital world. But you still just have to have the proper approvals and the proper segregation, right? So again, the person that might, send the information to the bank to wire the money, on the bill.com or whatever, doesn't need to be the same person that approves the transactions, you know. Um, you know, or if they are the same person because of the small nature of the organization, the limited number of employees, somebody from that board list, the treasurer obviously is the obvious person, just needs to at least see it on the back end on every month, once a month, to to just know what's going on, know where the money's going.
And when you say on the back end to see, I mean, that's just like an accounts payable or a payables report is what you're
Correct.
talking about, right? This
That's
is
right.
every bill we paid or
Yeah,
whatever
you
the
can do
case
a
may be.
simple disbursement report or something like that, you know. And the board members, especially the officers, the president, vice president, treasurer, et cetera, they ought to at least have some working knowledge of what the vendors are doing. Putting it back to this Jackson Health situation, this was a Miami-based foundation helping Miami area people. And a lot of the 4.5 million that the COO stole from the organization went to pay vendors in the state of Georgia, specifically in her hometown of Georgia, which being from Georgia, I know where her hometown is. It's in very rural southeast Georgia, population of a couple thousand people. And there are these vendors that are getting 70, 80, $90,000 a month every month for things like audio visual services and, fundraising support. And, not that there can't be a company in a town of 1,500 in rural Georgia that can provide these services, but as a board member, if I look at that and say, well, we've paid, Brian Carter Inc. 90,000 a month for fundraising services for the last 6 months, I don't know who that is, and I thought we were using Michael Corley down the street. That's where so the board members just need to have some working knowledge about who these vendors are and what types of services they're getting from them. Because this thing would have unraveled in a heartbeat if that was taking place.
Well, just a few questions. That's interesting.
Yeah.
So, we often hear, oh, board shouldn't get into staff business. That's staff
Right.
business. So, which is dangerous, and you're highlighting that right now. The board should, in this case, provide fiduciary oversight, particularly
Fiduciary
around,
oversight, correct.
yeah.
I mean, there is a fine line, Michael, between being involved in the day-to-day minutia and putting your thumb over people and exercising your governance responsibilities. And that's why you're not asking for in a situation like this where you've got enough employees to have a pretty decent internal control structure. You're not asking for the board to approve prior to payment, but at least on a monthly basis, the board should have some sort of review of the finances, and to what level, could be dependent on each organization's specifics, but you know,
When we talk about the magnitude of this, and I know you're not involved in the case at all, but you almost think, should somebody have known or gone, huh? I mean, even in a lower level employee, wouldn't you kind of go, huh?
well, in this case, again, the COO had a lot of power and a lot of control. And so she may have been directing checks to be paid. And even if that person had a question, the person that she reports to is the person that's given her the order, right? So, you know, in some organizations, and this isn't really, it's not cost effective for a lot of organizations, but you can have a little, there's services out there that you can have like a fraud tip line, right? And you can set up a tip line, and it's a 1-800 number, and somebody monitors it, and then depending on how the organization sets it up, the things reported to that tip line every month might go to the CEO, or they might go to the board president or something like that. And that may not be a cost-effective way for a lot of people, but you probably should, even in the smallest of small organizations, have some sort of mechanism in your policies and procedures on how should employees, volunteers, etc., report things that they're concerned about, right? And generally speaking, that reporting should probably be to some member of the board to kind of get, because what if, as a volunteer, I think the CEO is doing something inappropriate, right? I have nobody above the CEO to report that to other than the board. So that's the board, even if it's just, emailing the board president, now, are you going to get, hey, Billy ate my sandwich out of the refrigerator in the break room kind of stuff? Yeah, you are. But, you know, to your point of shouldn't somebody underneath the COO have noticed something? They might have, but the organization might not have had a structure for that person to report it to other than to the person they were concerned about.
Very fair. So, oftentimes we say, well, they got an audit. They
Hmm.
got an audit. We think this audit will uncover every little thing in the world. And you and I both know that's not the case. You're an auditor. So how did this person get around anything with the audit finding this stuff out?
Sure. So in this particular case, the bulk of the money that was stolen was done through vendor invoices, where a vendor would send an invoice to the foundation. At least this is all, of course, reported in the news reports that we've read. Because again, as you pointed out, we're not involved in this other than just reading the news stories like everyone else. The vendors in these Georgia companies would send invoices to the foundation, for services rendered for a dollar amount. The COO would approve it, initiate the payment, sign the payment. The money would go to the vendor, and then the vendor would split the money with the COO. You know, kickbacks, whether it was, what their percentages were, who knows? But there are a few vendors in this case that are being prosecuted as well. The main one has been indicted and is being prosecuted as well. There's a few others out there. So in this case, as an auditor, if I come in and I'm auditing expenses, right? And last year, audio visual expense went from 25,000 to 300,000, and I start vouching, well, I'm going to have invoices, right? Legitimate invoices from a legitimate company with a legitimate business address, right? And then if I inquire of the structure of the company, I'm probably asking the COO, hey, why did this go from $50,000 to 300,000? Oh, well, we had this, we did 4 fundraising events this year instead of one. We did this really big media campaign to raise money for childhood cancer, whatever. And you look at the invoices and it's like fundraising event on October 7th. Well, okay, kind of the dots all connect. So that's kind of where the second fraud that I mentioned up front, collusion, comes in, right? So in this particular case, the organization had a very poor control structure, and they had collusion because they had an outside party unrelated to the organization that was in collusion with the COO to defraud.
Interesting. So even in your if you when you're doing your field work, if you happen to test that, you call them and they're like, "Yeah, they did the work."
Yeah, and
Or
you
we
see
provide the work. Ah,
you see the invoice, right?
yeah.
And
Yeah.
you see the check going to the company. And even if you look at the scanned image of the check and look at the back, and it's endorsed by the company, like what, and the explanation of why, variances year over year were so large, if they seem reasonable, make sense, check out, like, you know, again, that's why collusion's really, really, you almost have to have a whistleblower that rolls on somebody, you know.
Yeah,
Um,
interesting. So let's go to the Sarasota Little League because that's
Sure.
recent news here in our little part of the world.
Mhm.
The treasurer was indicted, arrested for embezzling money. That's my term. I don't know if that's the correct legal term, but I want to read something to you because we talked about this prior to this. According to the arrest affidavit, the league identified more than 160 off-season ATM withdrawals, totaling more about 160 grand, unauthorized Amazon purchases on a league credit card, and other ATM cash transactions. So here's the situation: full volunteer board. There's no paid staff. It's a little league, right? And
Yeah.
it's parents and their funding thing. So when you hear that, give me your assessment on that, and how does that happen, and how do you prevent it as a
That's
board?
that's a really tough one because again, the volunteers are the ones perpetrating it, right? So here, and you have no paid employees, right? So you're entrusting the treasurer to expend the funds appropriately. But in this particular case, the treasurer still should have made some sort of reporting, right, to the full board. And if the treasurer had the league credit card, which I presume they did, at least on a monthly basis, someone, maybe the board president, should have been looking at that credit card usage. And if there were a bunch of Amazon charges on there, there ought to be an underlying Amazon invoice. I mean, we all order from Amazon, right? But we all have documentation of what we ordered from Amazon, right? Now, if you look at my credit card bill, my wife's got Amazon, 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 Amazon,
Yeah,
Amazon,
yeah,
right? But I'm the one picking the boxes up off the front porch. I know what's in them, right?
that's right.
In this case, the board treasurer on behalf of the league, has all those Amazon charges. Well, the board president probably should just get that. First of all, the credit card statement maybe should go to the board president instead of the board treasurer, right? And then the board treasurer should turn in all the back end invoices that they put on the league credit card to that board president, right? So that the board president can see it. And then again, we all, specific to this one with Amazon, we all know on that thing, we can see where it was delivered to. Was it delivered to the league office, or was it delivered to the treasurer's personal home, the treasurer's place of business? Where was it delivered? Um, and so again, that's, even though you've got a volunteer board and no paid employees, you can still have a check and balance. It's just the board. I go back to one of my initial comments. The board is yes, it's there to shake hands, kiss babies, and raise money, but it's there to govern the organization as well, and they have a fiduciary duty. Um,
Well stated. Let me ask you, even on the ATM transactions. So, what I'm hearing you say, to have proper controls in place, multiple people on the bank account, multiple people reviewing the bank statements. You can't
yeah,
just have one who's reconciling on a monthly basis and sharing it with you because they're the only one in control. You do
that's
need
correct.
multiple people looking at it.
That's right. Yeah, that's right. And in this particular case with the ATM transactions, and the one thing you pointed out there that should raise a red flag to someone is off season, right? It's probably not unusual in season to have some ATM transactions because maybe you got to have some cash in the concession till. Maybe you got to pay some some people to work maybe you're not getting volunteers for that. You got to pay the umpires. You need some cash. So in season, probably not unusual. But off-season ATM transactions in something like the Little League, I can't imagine why you would ever have to have an ATM transaction off-season, right? But even still, in season, if you know that, okay, on a Saturday, we're going to have 15 games, each game is going to have one umpire, we pay the umpires $50 a game, we need, $750, we need $150 for the concession till to make change, that ATM withdrawal ought to be $1,000. And the umpires ought to have gotten paid, and there ought to be some sort of little process that they have that tracks that, right? And then at the end of the night, that concession till, maybe the money gets redeposited, maybe it goes into a safe. I don't know what they were doing there, but you still ought to have some sort of process and control, you
Yeah,
know.
and I think that's important, a written process and control that people adhere to. Back in the day, I was did parking for my son's high school football team, and we had wads of cash, and I always insisted somebody count it with me, right? Always have. I mean, we had a ton of cash. I'm thinking, well, I could walk away with this, nobody would know. But yeah, we're going to do the deposit, and two people count the money.
That's right.
Just
100%.
yeah, especially when there's a lot of cash. In these types of events, cash is plentiful, which means a propensity to, or quite an opportunity
That's right.
to take some.
Yeah. And look, let's say up front. I know we're talking about fraud and how these things happen and how we can prevent it, but the overwhelming majority of people in our community are good, honest people, and nothing ever happens. But you know, you know, you need to have the controls and policies in place so that if somebody does get, a wild idea, that it can be spot. You can never prevent everything, right? But at least if you have controls and policies in place, maybe you can catch it before it becomes a problem.
Yeah, and we want to trust people. Like in a situation like this, I know the board trusted this person because we're trusting by nature, but it's important to be insistent on having those controls in place. How do you advise an organization like this, or any organization that has a lot of volunteers and a lot of turnover? Right, kid stops playing, I'm no longer on the board. Next person up for maybe a year or two. How do you ensure continuity of those controls?
So, a couple things really. One, you need to have some written policies and procedures that can be passed down from generation to generation, if you will, right? If you don't have them, the current board is just going to have to take the pain and create and write down and memorialize those policies and procedures, right? And then what I would say from that standpoint, from your board structure, especially at the officer position, you need to have staggered terms, right? So that not
Sure.
everybody is rolling off at the same time, all right? If you've got a board of seven with three officers, say a president, vice president, treasurer, right, and four other, non-officer board members, don't have those officers all three roll off at the same time, right? Have staggered terms. And I realize in this case at the Little League, like you said, the kid, moves up, isn't playing Little League anymore. They aren't involved anymore, but you know, still get people early enough, and hopefully you can do that. One of the one of the famous sayings most auditors have, you know, most people ask, what do you do as an auditor? Well, I trust but verify. You use the word, we like to trust these people. You can trust people all day long, but I still have to verify you did it.
And I think it's important that just the familiarity, friendship, that doesn't absolve the responsibility of a
No,
501c3 board member.
no.
And I think that's where people are a little loosey goosey. They're not trained on it. Mean very well, but there's a real obligation and
There is absolutely
responsibility.
there absolutely is a real obligation, when you look at the duties of a nonprofit board member, it's duty of care, duty of loyalty, and yeah, you want to do right by the organization, you want to be a good face for the organization in the community for whatever it may be, but you have a fiduciary duty to utilize the funds given by the public, because that's what a public charity is. The funds were given by the public, for the purpose and the mission of that organization. You do have a fiduciary duty to ensure, to the best of your ability, that those funds were utilized in that manner. And you're right. A lot of nonprofit board members aren't trained in that. Which, and I know in a lot of small organizations, it's hard to find, to use the term qualified board members, right? Um, but you just have to have it. You have to have a couple of people that have some sort of knowledge and ability to handle that fiduciary aspect when it comes to the finances of the organization.
Yeah. Yeah. And it's codified. I tell the boards all the time, and believe it or not, in the state of Florida, chapter 617 is nonprofit board roles and responsibilities. It's right there in statute.
Right.
And it is quite an obligation. So Brian, last question as we wrap up, and this has been a wonderful discussion. Any last thoughts, any last comments, words of wisdom to board members out there about the potential for fraud and abuse or mitigating the same?
I think take your job as a nonprofit board member seriously. Dedicate the same time and effort you would to your own checkbook, to management of your own household, and just pay attention. We always talk about, when you look about, you go back to some of the 9/11 stuff. If you see something, say something, right? If you see something, say something. Pay attention. Be an active board member. Don't show up to board meetings and, play on your phone and, all that sort of stuff. Listen, read, ask questions, and just be involved. Again, give it the same due diligence you would your own personal life.
Yeah, Brian Carter, ladies and gentlemen. Brian, thank you so much. He's nonprofit practice leader and partner over at Mauldin and Jenkins, and he's been in the community quite some time and does a lot of great work here. And Brian, thank you for your words of wisdom and sharing your expertise with us today.
Thank you very much. I enjoyed it.
Woo, boy, oh boy, the tangled web we weave. Now we have our Recapping with Reed segment. Reed, 3 takeaways from the conversation with Brian.
So my first bonus takeaway is absconded is a word. It means to secretly leave or run away, often to avoid legal obligations, or to take something that doesn't belong to you. So that's we mentioned that at the beginning of the episode. It is a word, and it does mean what you thought it meant.
Thank you.
To the real Recapping with Reed segment here. Brian said that fraud generally happens in 2 to 3 ways. There's a lack of controls. There's collusion to circumvent those controls, or just the back-end review people did not do their job correctly.
Yeah, that's right. Now, that was number 1. Number 2.
I think what was very eye-opening was Brian saying that that COO of the Jackson Health System Foundation had the ability to prove anything up to $100,000. So she could write the checks and approve the checks, send them off up to $100,000 without anybody else getting involved, which is, he said, that's a very high limit, usually maybe around $10,000 to $25,000 for somebody in her position.
Yeah, big difference. And number 3.
The vendors that she was writing those checks to were located in Southeast Georgia, not Miami, for a Miami-based foundation. So there's just a couple things here that board members need to start wondering. Why are we using a production company based out of Georgia when we're in Miami, Florida, potentially like places that have great production companies right here? So just think about where these payments are going.
Yeah, it's maybe not a red flag, but a yellow flag. It makes you go, huh? The whole common sense approach. There you have it, ladies and gentlemen, Recapping with Reed with his 3 takeaways from our conversation with Brian. And we will I-501 see you next week.